In this video, I'm going to show you how professionals analyze the financial market without indicators. Now, I'm not saying that indicators are bad. You can use indicators. I also sometimes use indicators when I'm trading. But of course, professionals really don't like using indicators. And this is how exactly they analyze their market. Now, this is what you do. This method is going to help you whether you trade crypto or you trade forex or you trade stocks. So I don't trade forex, I don't trade stocks. Sometimes I do, but rarely. I normally trade, maybe I normally trade weekly, week in, week out. I normally trade crypto. So crypto is my best. I just love crypto, but I have a lot of friends of mine who trade forex. I also do sometimes, but not often. I also have friends of mine who trade stock. This is their best method, and this is the method that they use. This is the first thing. When they are going to use other methods, they first use this method. So it is also my favorite. It is the one that I normally look at first thing in the morning. Maybe if the day that I'm going to trade, I don't trade every single day, but the day I'm going to trade is the method that I really use. So I will, after saying that, let me show you. This video is going to be divided into two parts. So this video is the first part is going to be divided on how to find support and resistance in a bull and bear market. So they first use this method, this technical analysis, to identify how to find support and resistance, and that's what they normally use when they are trading. And then I'm also going to see to look at how to read on the real graph. Like, we are going to see these things on the real graph. I'm first going to explain to you, and then we are going to see it on the real graph. So by the end of this video, I'm expecting you to at least have some language in technical analysis, like the way the pros do. So you watch this video up to the end, step by step, and you're going to be able to understand how to identify support and resistance in either crypto market, forex market, or stock market, in any financial market that you are trading in. So also I'll be reading the graph. Of course, I'll be reading for you the graph before the end of this video. But with that being said, if you are meeting me for the first time, my name is Jibril, and on this channel, Mobile Money Jibril, this is my channel, Mobile Money Jibril. I do anything about making money online. I create videos about making money online. So if you have not subscribed to this channel, please make sure you subscribe to this channel. Click that bell and subscribe to this channel, and then like this video for the YouTube algorithm. You would have helped me so much if you can like this video and also subscribe to this channel. So with that being said, hoping that you have subscribed and liked the video, let me start the video. Now, this is how the professionals really identify their support and resistance. So every day in every market that you are reading, of course in the crypto market, I'm going to be giving most of the example in the crypto market, so but this thing applies anywhere. So in the crypto market, when you are going to read, you find that you are supposed to either identify whether the market is bullish or bearish. Now, if you don't know anything about bullish or bearish, it means you just take this, that bull is for rising while bearish is for dropping. So either the market is rising up or the market is dropping down. So those are the two things how the market runs. So you find that someone says today the market is bearish, today the market is bullish. Now you have to first identify that. Now, when the market is bearish, it means it is coming down. The market is coming down like this. It moves like this, like this, like this. So that it means the market is coming down. Now, if the market is coming down, there is one rule that they normally say, that if the market is coming down, the financial market will never come down like this on a straight line up to the bottom. No, it will never come. And if you have ever seen the graphs will never run straight like this up to the bottom, maybe 100% up to zero. No, they will never do that. So when the market is really in the bear market, this is what happens. Please first make sure you understand what I'm drawing. Then I'm going to go to the real graph and show you what I'm talking about. So you have to first understand this. So this is how it goes. This I'm on the bear market, please. So when there is low, the market comes low, and then it tries to reset back. Even in the bear market, the market will always try to reset back, and then it comes low again, it tries to reset back. It comes low again, it tries to reset back. So we have lower lows and then high lows and then lower low. So what you do, if the market is still here, this is what normally happens. Let me draw the graph again. This is what normally happens. This is what you identify that this what makes you identify that this very market we are in, this very market is what is bearish. So let me stop there. Now this is what happens. You identify the last, that from here you have already seen that the market is really coming down. What makes the market to come down? Can identify the when it was going up. What was the last time it was going up? This was the last time it was going up. Are you seeing? That was the last time it was going up. But you find that when it is going up, it does not pass the last time it was up. You see, the last time it was up and the last time it was low, it does not pass there. Oh my God, let me draw it again. Oh, it is disturbing me. That's why I wanted to use a computer, but most of my followers, they use phone. That's why I try to make videos with the phone so that they can understand well. So it's I would have done it on the computer, but let me hope you're understanding. So this is it. You have to identify. You see, when it was low, every time the graph is coming low, the graph is just coming low. Why? Because when it tries to go up, it does not pass the last time it was low. You find that this high is actually lower than the previous low. You find that the high here is lower than the previous low. It means generally the market is going down. But now, how do you identify the support and resistance in such a market? So what you do when the market is just like this, you identify the last time it was trying to go high. So when you identify this, the last time it was trying to go high was this is the last time it was trying to go high. Then you'll draw a line like this. You'll draw a horizontal line to identify the body where the last time it was trying to go up. Then you'll check on this side, or you check on this side of the market. Just like sometimes you find this one here, you find that this last one tried to touch this line, but you have to check all along this side to see that there is at least this line you have drawn, it has ever been supported. So in a bearish market, now when you draw this line, you expect that as this market goes down, when it tries to reset up, this will be its support, its resistance. It will not try to break through here. It will just come down, because now the market is what? The market is showing you that it is bearish. When it breaks through here, this becomes the resistance. And now you will be expecting the market to be bullish. That if it now passes this line, when it comes back, it should be bouncing on that line. So I hope you have understood that. So that one is a bearish market. What of in a bullish market? So in a bullish market, how do you identify a bullish market? The bullish market, you find that when the graph is going up, it tries to come down, but it still doesn't come down to where it had started. It will remain there and then tries to go up again. It will pass the low here, comes down, it goes up. So when you see such a graph, you identify that this market is really a bullish market. So after identifying that the market is going up, some people really get confused with bullish and bearish in the support and resistance. So I'm going to try to use the layman's language. So this is it. If you identify the graph is like this, and now it means that the market is going up. So you identify the last time it was low, the last time it was trying to go low. So the last time it was trying to go low, here you have here, and then you have here. So this is the last point it was up, and then it came low. So what you do, you are going to draw a line here. After drawing that line, you have to test for this line this side. You have to look for, you see if this line has ever been tested once or twice. If the line has ever been tested. If it has not ever been tested, then it might not be a good place to trade in. But if it has ever been tested this side, you find that what do I mean by testing? You find that sometimes this graph was going, it had touched there, and then reversed. So you find that is a very good trading zone. So these ones we are calling them trading zones. Why? Because they can act like our support and act like our resistance. When do they act like support or resistance? Now this is it. If it comes back here, if it comes down, it tries to come down and bounces, you can identify that is going to be. Now, if you have not understood how to identify that support or resistance by the graphs I was drawing, don't worry, because right now we are going into the real graph. Now, I don't know which graph you really use, but for me, I use sometimes I use the graphs on Binance. I use the graphs on Binance. So this is my Binance, but Binance is only for crypto, and the crypto traders we use Binance. But if you are someone, I want to use trading view because it is the best, by the way, whether you're trading crypto, stocks, or what. I like trading view is the best. So I'm going to open my trading view. So let me open my trading view. So let me open my trading view. So over here is my trading view. For those who don't know how trading view looks like, that is there. That is my trading view. So I click on trading view. When I click on trading view, it's going to open like this. So normally on my trading view, I have a watch list. So there's this watch list that I named Royal Q. Royal Q is actually a trading board that I use. I use a lot of bots, of course. I use a lot of bots, some free bots, right? So you could name your watch list anything. You could name your watch list anything. Now, for those who don't know watch lists are a group of pairs that you are really looking at, that you really look at. So for me, when I wake up in the morning, I come and look at my watch list. So this is my watch list. And then I sort my watch list on. I'll click up here, and then when I click up there, and this is the first thing I do always when if the day I want to trade. So when I click up there, I look at the changes. So I have to take a coin that is volatile, a coin that has been changing. So when I click on sort by percentage, it arranges itself. Then I see which coins are volatile of that day. So on this very day of recording this video, these coins are really volatile. So it's the same thing you can do. I told you trading view works for stock, works for forex trading, works for crypto. So any financial market trading view is there. So if you want, for those who want trading view, I think if I don't forget, the link of trading view is going to be in the description of this video. You download it and you try to use it. So for today, let me look at this second coin, GRT, or I pick the first one. Let me pick the first one that is on the list today. So I think this graph can give you some idea of what the market is doing, but of course that is not the graph that we really want to look at. So I'm going to click on full chart so that I see the real chart. So this is the full chart. This is the full chart. Someone is going to ask me that which time are you using, time frame are you using? If time frame really depends on which type of trader are you? Are you a day trader or a swing trader? Now I'm going to analyze it as a day trader. If you want to do like a day trading, of course, day trading are most likely the highest time frame maybe they use sometimes is a week, 1 week. But day trading mostly they use a day, 1 day time frame, and then they will use like 12 hours, 6 hours, 4 hours. So for me, when I'm analyzing and I also like day trading. The day that I come for when I want to trade, I go for day trading. So I use 1 day time frame. I'm using a 1 day time frame, and on a 1 day time frame, this is how the graph is. Now, ladies and gentlemen, on the 1 day time frame, let's open this graph clearly, very, very well, and we see what really happens. So I want to open it very well, very, very well, for you to see it clearly, everything that is happening, so that we can analyze when you are really seeing. So from above here, when I squeeze it like this, we can see that from up here it brought in a low. From up here it brought in a low. Let's see. Here, let me draw first my line. You can see that from up here up to down here, it was a low. It brought in a low. Then it tried to come back. It came back, and this was this. When it came back, I'm on the 1 day time frame. It came back, and then it raised back down. It raised back down, but again it passed the what? It passed our low. So from here, I'm analyzing. Follow. From here up to down here, it was a bearish market. A bearish market. As you can see, why was it a bearish market? We have explained. You can see that the market here was going sideways, but it did not pass the high. It did not pass the previous high. It just stopped somewhere and continued to come down here. Now, why do we call again from here up to here? Why do we call it a bullish? From here up to here, it is becoming bullish. Why? Because this is it. Follow closely. Let me open it clearly, and then you see it very well. This is how professionals do without indicators. Professionals do this without indicators. Now, you start analyzing from the body. Now this is just a week, this is just a week, but the body of this very candle you are seeing is here, the body is here. So we are going to analyze it on the body, on the week. You can do it on the week, on the body. It is just going to give you the same picture. So when you are analyzing on the week, you are going to see, let me do it on the week so that I don't confuse beginners. So you see, on from this week, the market retraced back, here. It retraced back and it closed here. Now when it closed that, you can see that the market came back down. The market came back down here. When it came back down, it tried to go up. It tried to go up to here. When it tried to go up, it also tried to go down. But again, at the time it tried to go down here, the down did not pass the last down. You understand? It means this down is higher than the last down. What happened next? It went up. It went up. Are you seeing? When it went up, it tried to come down again. It tried to come down. But again, even this down, when it was trying to come down again, the down is not lower than the previous down. Let me hope you are following. Yes? So this one, because this one here showed a clear bear run. It was a bear one. The market dropped drastically. This is a very big move in the industry. Maybe big financial institutions did a trade here. So we are trying to retrace back. The market. I don't want to explain this, but I'm explaining support and resistance on this graph. So you have to identify whether today, what is happening today in the market. So today I'm analyzing. This is actually a real graph. I'm not like a copied graph, or this is a real graph. So it came here, but you find that this low was higher than the previous low. And then what did the market do? The market went up again. Now you see, the market went up again, and when it tried to come down, are you seeing this down? This down is still higher than the previous down. This shows clearly. You can see these three. They are showing clearly. Actually, they are four. They are showing clearly that this market is what? Today, the market is a bullish market. So the market is a bullish market today. So we are glad today the market is a bullish market. We have identified what the type of market is. So I hope you have also identified that. So the next thing, after identifying that, now you have to look at the past high. So the past high, what we had on the past high. Okay, when I open this graph clearly, I want to open it clearly and identify that very well. Okay, this is how the graph is going. We have from low up to this high, we have from here up to this high, then from here it retraced here, and then it is trying to go back. So this is the body of this candle here. The body of this candle was the last high that tried to go up, the last up that tried to go. So we are still, this candle is not yet closed. This candle here, the one that is running, it is not yet closed. So that is a candle that is running. You cannot analyze exactly on that candle because you don't know how it is going to close. So we analyzed on the previous candles that closed. So the last candle that closed up highly was on this very candle. And then you can see also this green here tried to close on at the same level. So what you're going to do, you're going to draw a line. You are going to draw a horizontal line to cut that very point, and we are going to see how the graph is going to react on that. So to draw a line, you are going to come and click on this pencil here. You click on that pencil, and then you click on trend line. You click on trend line. So I click on that trend line, then you bring it to the body. Okay, some people draw it on the week, but of course the body is the best. You can draw it on the body. When I draw it on the body, then I come this side. I have to draw it this very side. Okay, now I make these videos with the phone, and the phone, that's why we advise to use laptops. But of course, most of my viewers use phones. That's why I really love making this thing with the phone. I love making it with the phone, but of course the phone gives you a little bit of inconvenience. If you have a laptop, why don't you trade with the laptop? If you have a laptop, you can trade with a laptop because you'll see these things clearly. But again, if you don't have a laptop, it is not a crime. If you don't have a laptop, it is not a crime. You understand? That's why I do most of my videos with the phone so that people can understand. So you can see over there the graph that I have drawn. So this one becomes our trading zone. But this trading zone, they have to be like two of them. I'm going to draw two two graphs. Let me draw two lines. I mean, to identify my trading zone. So this is my trading zone. I'm drawing this around there because that was the last time it was the last time it went up, and the market is still now rotating there. So I'm supposed to wait to see how this candle is going to close. But before I can keep on watching this line, I have to move this side. I have to move this side of the graph. I'm going to check this side of the graph and see if this line here has ever been tested by the market. So you can see that it has ever been tested by a wick. Now a wick, this is called a wick, this small thing up there. So you can see that this wick tried to come onto this one, came this very one came into the trading zone, and then this one also came into the trading zone. But again, I have to make sure that I move through my graph, I move through my line. This line has to be long. I have to make sure that at least this side it has ever been tested. It has ever been tested. I told you it is better to have what? It is better to have a laptop, but of course I do these videos for my followers who don't have laptops. So what are they going to do? What are they going to do? Because they don't have laptop, they should be left out. They cannot be left out because they don't have laptops. So they have to at least have something to follow. So when I look into this graph, when I look into this graph, when I look into this very graph, we can see over here as the market, when you see up above here the history of this for the past days, you can see that at least this line is showing you that for this very analysis that we are doing, this coin that we are analyzing, you can now see confidence that this line all over, the market has been actually trading above this line. This line can be our good support, our good support. So this trading zone that we are identifying, we are testing it if the market has ever tested it. Now, when you move this side of the market, you can see that yes, for long days, graphs, this market has always been way above that trading zone. So this gives you confidence. This gives you confidence. But what was I looking for? I was not going to rely much on that line, if it was not tested before. If it was not tested before, you see. Oh, I drew it, it went down, but let me correct it. So from extending my graph, you can see that this line we are trying to talk about, I've really squeezed the graph so much so that I can get to see the general information. I've squeezed the graph so much. We can see that it has ever been tested up there. It has ever been tested. Actually, it has been tested three times, almost three times. You can see that green over there. It has been tested three times. Don't rely on a zone that has never been tested by the market. It has to be tested by the market. So yes, we have seen that. So it has been tested by the market. Now, what is the final conclusion? And in this trading, what is the final conclusion in this trading? Let me come back now. Let me come back to my graph and show you now how are you going to analyze. We are not going to do entries and exits. We are not going to trade. We have been analyzing. But now, what is your final conclusion? Now, the final conclusion is this. In trading, of course, you have to wait and see what the market is going. You have to have your own opinion about the market, opinion about what the market is going to do, but you cannot dictate what the market is going to do. You cannot tell what the market is going to do, but you can have an opinion. So from this analysis, what is our opinion? Our opinion is this. Our opinion is that we are going to wait for these candles, the next candles, to close, and those next candles, their closing is going to tell us something. It is going to tell us if they start like the way we have drawn this zone, if the candles all of them start closing above this zone, if they start closing above this zone becomes our support. This zone becomes our support. But if they break it and start going down, but of course we have an opinion. Our strong opinion is that they are all going to be on this zone. They are going to be actually trading around this zone, and then going up. Why? Because we have analyzed the whole market today is what is bullish. The trend of the market today is bullish. Therefore, we are expecting that the prices are all going to be at least ranging here while going up. They are going to be closing around here going up. And if it doesn't happen like that, so what would be the next thing that will happen? Because of our analysis, we have seen that this is the trading zone. What the market is going to do, if the market really tries to break this, it breaks down here, then we look at the next time, the next zone that it was what, the next zone that it retraced. So this is the next zone. So if the market breaks down here, this will be the support and this will be the resistance. So we'll be expecting the market to be trading around there, because this is the last time it was tested. I think you can see that this line is tested here, it is tested here. So that is how we analyze it without indicators. If you have really got some value in this video, make sure you like this video and subscribe to this channel. And if you have question about trading, technical analysis, or what, robotic trading, of course I love using robot. Now if here they have analyzed here, now I just go to my robot and trade and set it, because I'm a content creator. I don't like looking at the graphs. Like this, that is the worst thing you can do in trading. Looking at the graphs every single day, it can really I don't like it, because I really do a lot. It can stress you. But that is how we analyze it. And if you have got value, please, you can smash the like button. If you have liked the video, please, you can ask for whatever you want. I will make sure that I answer you. Thank you so much for watching. See you in the next video.